Welcome to weekly view on markets. Nifty closed on Friday at 17,539 with a marginal loss of 0.11% for this week. The week was highly volatile. On Monday, market crashed due to weak global clues and it took support at around 17,200 to 17,300 region and pulled back on Tuesday, recouped most of the losses. And remaining 2 days, the market was consolidating in a small range and it posted a marginal loss of 0.11% for the week. So, last week, if you have seen my discussion, around 17,200 is a good support for Nifty, and market has taken support at those levels. Now, what is going to happen from here on? Though we see a marginal loss in Nifty, the broader markets have outperformed during this week. Nifty mid cap gained about 0.93%, Nifty small cap gained about 0.21%, and Bank Nifty was leading and posted a gain of 1.1% for this week. So, the positivity in the broader market indicates that the uptrend in Nifty is likely to continue. We may see market taking a knee-jerk reaction due to some weak global news or global cues, but that will be a buying opportunity for traders. Volatility is very high in the market. India VIX, the volatility index or the fear index, has gone up by about 7.3% during this week and is at around 19.55%. So this heightened volatility in the market makes it very difficult for the traders to trade the market. So traders have to take a cautious approach with strict stop loss and risk management along with money management. Now let us look at the chart of Nifty. See, this is daily chart of Nifty. These two support lines I had drawn last week, and you can see that on Monday, market has taken support at around 17,200 as I had discussed during last week, and from there it has pulled back. All the losses were recouped on Tuesday, and Wednesday was a holiday because of Ganesha festival. Thursday and Friday, market has consolidated. So let us look at weekly chart to get an idea what is going to happen next for few weeks in the market. This is a weekly chart of Nifty. Here we can see the cloth formation has happened with a downward dropping channel, and Nifty has closed above this. Even though this week Nifty slightly came down, but finally closed the week above the support level on this support level line. So the uptrend in Nifty remains intact and Nifty movement is supported by the broader market. There is a bullish sentiment in the broader market and bank Nifty. So this all shows that Nifty is likely to continue the uptrend. May not be at a very fast pace, but with some sort of consolidation and some few corrections and all. But the overall trend is up for the. Now let us look at Nifty mid cap. This is a weekly chart of Nifty mid cap index. Here also we can see the mid cap index has closed about the weekly support level of about 30,000, and the mid cap index has been outperforming the market, and lot of companies in the mid cap segment are showing good uptrend. So this supports the market. Now let us look at Nifty small cap index. The small cap index also is showing a it is in a good up move and showing uptrend, and it can be noted from the long term chart that in 2018 small cap index was 9,617, and now also it is at around the same level. So I feel going forward there is a good scope for the small cap index to do a catch up rally. So we can look at picking up fundamentally good stocks from the small cap universe. Small cap and mid cap are likely to outperform the market in coming weeks. Let us look at Bank Nifty. This is a weekly chart of Bank Nifty. Bank Nifty also is showing a big green candle. So Bank Nifty has led the market during the week, and Bank Nifty is likely to lead the market in the coming weeks as well. This is about the technical aspects of the market. Let us talk at some of the sectors in the market. The banks have given good rally during this week. Gain of auto sector has posted a gain of about 2.25%. FMCG sector gained about 2%. So among banks, PSU banks are leading the pack. So they have come out of the NPA cycle, and earnings growth in PSU bank has started picking up. PSU banks have started outperforming due to this reason. Which were the sectors they were dragging the market during this week? IT sector closed with a loss of about 3.3%. IT sector is affected by the slowdown in Europe and US economies. Healthcare and pharma also were dragging the market with about 0.6%. But oil and energy sector was also lagging during this week with about 1.3% cut. Commodities also corrected with about 0.7% cut. Oil and gas also underperformed with about 0.5% loss during this week. Now let us talk about some of the fundamentals of the market. GDP growth figures for first quarter of FY23 has come out at 13.5. But on percentage wise, uh, it is difficult to understand because last year was a low base. If we look at the absolute figures, India has become the fifth largest economy, overtaking UK economy. So India's GDP absolute figures is around 3.8 trillion, and In 2019, and that is just before the start of COVID, Indian economy was around 2.9 trillion US dollars. Now it is 3.8 trillions. I think even though there is not much market significance on being the fifth largest economy from the stock market point of view, but as an Indian, I feel very proud that we have overtaken the UK economy. Britishers have ruled India for 200 years. So today we have overtaken UK economy. I think every Indian should be proud at this moment. Now GDP forecast for next 2 years, that is FY23 and FY24, is around 7 to 7.5%. Many rating agencies and brokerage firms, they are expressing reservation about this. But RBI governor recently in his interview has expressed his confidence that RBI is going to support growth and economy is set to grow. And also he has talked about inflation, that inflation has peaked out, and by the end of FY23, inflation is likely to be below 6%. So this is a good news for the market. So if inflation comes under control and starts declining, it will have a positive impact on the corporate earnings and growth. So that should be good for the market. GST collections for the month of August has come at 1.43 lakh crore. So successively, GST collections have been coming about 1.4 lakh crore, which is a very good sign. And we have seen good growth in the manufacturing sector, as indicated by the PMI index, which has come out for August. It has come out at 56.4, so which shows a good expansion in industrial activity in our country. So this is also corroborated by the auto sales number. So commercial vehicles, passenger vehicles, two wheelers, and four wheelers, all sectors have shown growth for the month of August. So automobile industry and automobile accessories form a good part of the industry. It contributes around 16 to 20% of the industrial sector. So when auto industry picks up, this is a major indicator that economic growth is likely to pick up. And we have seen during 2017-18, before the economy started contracting, the automobile sales started dropping first. So automobile sales gives a, it is a leading indicator, gives a leading indication about the economic growth or economic slowdown. So the pickup in automobile sales is a good news for the markets. Crude oil is around 93 USD per barrel on Friday. So it has been very volatile. Sometimes it is going to $100, then coming back to 93. But average, it is trading below $100, which is good for the market. At the weekend, there was a G7 countries meeting, and in this meeting, they have planned to put a price cap on oil and gas imports from Russia. How this is going to take shape and how it is going to affect the world oil markets is yet to be seen. So whether Russia will cut the supplies to Europe and whether they will find alternative markets. Maybe India may be one of the beneficiaries of Russian oil supplies. So this has uh, political as well as commercial implications on many economies. And we'll have to wait and watch how this G7 countries' decision is going to affect the oil market. So, with most of the high frequency indicators coming positive for India, but at the same time, the global inflation is high. The interest rates are set to go up in US and Europe. So their economies show the signs of GDP contraction. So there is a global risk, but we see good prospects in the domestic economy. So there is a dichotomy. But what I feel that the corporate earnings and growth has started picking up in India. Basically, market moves on the corporate earnings on a fundamental basis. So on this basis, I feel that there may not be any big correction in Indian market in the coming months. We may see sudden some reaction to the global news and developments, which may drag down our markets, and that will be a good buying opportunity for the investors to invest with a 2 to 3 years view. It is estimated that by 2029, India will be the third largest economy. We will overtake France and Germany also. So if that happens, India's GDP will cross 5.5 trillion US dollars, and that will provide a good growth opportunity for many companies, many sectors. So please be remain invested. Use buy on dip strategy. Invest in good companies for the long term. So there is good wealth to be created in Indian stock market. SIP investors should not get worried about market fluctuations. They should continue with their SIPs, and those who have invested lump sum should re- continue to remain invested to get benefit of growth in the economy and also in the corporate earnings. This is all for this week. See you next week. Thank you.